Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. People are wondering why silver is still so low, why it hasn't broke out from this pandemic. People would think that this would cause crazier prices, higher prices, more bullish prices, but things are still around the $15.25 range. So I have a couple articles I want to share with you guys and gals. Also sharing gold is at $1,720. So it is appreciating a little bit from its bottom around that $1,695 range, but silver just seems to be extremely volatile, but on the lower side. So why so down on silver? It's a short article, but we're going to explain it. I'm going to share my perspectives, my insight on this as well. So before we start, make sure to smash the like button. Make sure you subscribe, because I'm posting daily videos. Every single day I'm busting my butt to give the newest, latest, freshest, most up-to-date news in the world of precious metals for you guys and gals to be the most up-to-date and, to be on top of your strategy, your silver stacking strategy. So make sure you subscribe and make sure you like the videos. It definitely helps me out a lot. So the chart has a clear upside target, and the unspectacular COT, the net positioning of speculative traders, is not standing in the way of that. Gold sports a COT structure that you'd expect to be more of a contrarian, bearish given the current gold price. We also looked at the chart of silver, which more and more people are becoming bearish of, and we noted that a really muted little guy, the blue line, shows the non-reportables, example, private individuals rather than professionals in the COT data. So altogether, this gives us an unpleasant looking chart of the silver price in an okay large specks of commercial COT alignment, but nowhere near as good as it was last spring. So this is not at all negative, because the little guy will be briskly bullish at the next major top in silver whenever that comes. What's more, the Sprott Silver Trust Premium has been cut to 0.66%, in the essence even after a big drop and spike in sympathy with silver's price drop, which may have been the final flush in recovery. The difference between the pump of the last few weeks and the pump you can see here is in early 2016, that spike came after a flush. In the way markets sometimes work and precious metals often work, that might mean something we'll just have to see. So I understand the supply and demand overhang issues that silver is dragging around. So there are sentiment-based focuses or forces that in play that could support silver prices going forward. If the ball's out, inflation being promoted in the U.S. by fiscal and monetary authorities around the world finally takes hold as expected, silver is going to be a big play again. So he's talking about the surplus, supply and demand. And that's something that a lot of people don't incorporate. They definitely don't incorporate this when they're talking about, they'll focus on one little point, and they'll expand and they'll maximize that point, but not look at the many other factors that come into play that could affect silver's price. So short term, long term, it's all up in the air, but I am keeping this relationship to gold well on the radars as the ignition switch. So thus far, the gold to silver ratio is not doing anything. A little bear flag forming after a bear flag breakdown is not going to get her done. So I definitely think we have some stuff to talk about. First is the chart analytical standpoint, right? History repeats itself, but not to the same measures, especially since gold and silver are based off of what's happening in the economy during that time. What happened in 2008 is similar, but we still are not having the same results because the same things are not happening. Yes, there was a credit crisis, but there was not a global virus, a pandemic on the hands back then. Right now there is. So things are much, much different. Even though people want to keep trying to essentially make them the same or saying that it's going to repeat, it's not. It's much, much different. Times are much, much different now, even with supply and demand on the forefront. So the gold to silver ratio It's still a great indicator. It's still a great tool to use to see which metal is the better investment. And right now, we still see the gold to silver ratio sitting extremely high, which means that silver is going to have to start outperforming gold sooner than later. Unless we're going to see this ratio sit this long for even the 3 to 6 month term, Who knows? People are speculating it could be even longer. But a lot of people are bullish on the 3 to 6 month time frame, the time span from silver prices, saying that it could reach $20, $21 within the next 3 to 6 months. Now they're given, because the pandemic could take longer than expected. May 1st, we'll see what's going to happen, but a lot of people are still speculating that it could take longer. So, pandemic to dent silver supply and demand in 2020. This is a very interesting thing that we should talk about. So, the global virus pandemic will hurt both silver supply and fabrication demand in 2020. But the ultimate impact on the market could be offsetting, said the CPM Group in its Silver Yearbook 2020 released Tuesday. On the supply side, government measures to combat the pandemic have resulted in mine closures in some key mining jurisdictions, while some companies have also proactively shuttered their operations. We see Mexico and Peru having to do that same thing with some of the biggest producers. So at the very least, based on the current duration of mine closures and the daily output in 2019, the mine closures in South Africa, Peru, and Mexico should result in loss of at least 21 million ounces in silver. Further, this could end up being a conservative estimate with actual supply losses potentially exceeding this, since current government-mandated closures could be extended and there is a possibility of new ones, the consultancy continued. On top of this, there will be interruptions to scrap or recycled supply, as well as some refineries are being curtailed or shut down. A lot of gold is recycled, a lot of silver is not, a lot of silver is lost. So gold easily is recyclable, right? Because it's profitable to do so. So while such supply disruptions by themselves would have been extremely positive for metals prices in another environment, the same factors that are causing supply disruptions are also resulting in reduction in demand for silver for the fabricated products. There is little demand from both end consumers and from factories producing various products as they are shuttered in an effort to contain the virus. The net impact of these disruptions is near zero at the time. So the CPM Group suggests that supply and demand interruptions may clear up around the same time. Nevertheless, a slow recovery by consumers who may hold back the non-essential spending may have a negative impact on prices, the consultancy said. However, governments and central banks are injecting liquidity into their financial markets to offset the negative economic fallout, which is supportive for metals in general. A combination of immense market liquidity coupled with a more clear sign the global economy is on the mend from that loss during the pandemic should weigh more heavily on real rates and help lift silver prices when these trends both come together. Central bank monetary accommodation is unlikely to be removed quickly following an economic recovery, the consultancy continued. With nominal rates near zero, in some cases below zero, the threshold for real rates dip into negative territory is fairly low. So silver's underperformance provides a window of opportunity. So nearby, COMEX silver finished at $17.92 an ounce in 2019, year on year of 15%. So that's a gain of 15%. Although less than 19% rise in the price of gold, the annual average price rose to $16.23 from $15.71 in 2018. So it's still rising prices even given the circumstances. Silver prices were held back by low levels of net investment demand for physical silver and decline in fabrication during the demand in 2019. So the gold to silver ratio ended 2019 at 83 to 1, then climbed to 125 to 1 by March this year. This means it took more silver ounces to buy an ounce of gold, meaning an underperformance by silver prices against gold. It's not unusual for silver to lag gold's performance in early stages of revival in the prices of these metals. That's definitely true. Silver has initially lagged and later outperformed gold in a cyclical upward move in precious metals prices. While silver is not expected to put in this sort of strong performance in the near future, it should be expected in the medium term. So not saying short term it's going to blow out the water and explode, but medium term is definitely probably going to catch back up and that gold to silver ratio will lower back down. So silver supply and fabrication demand is expected to fall. So for 2020, CPM looks for total supply of silver to fall 938 million ounces. That's a lot. If this level of total supply is realized, it would be the lowest level since 2008, when it stood at 913 million ounces, the consultancy said. And we know what happened in 2008. The weakness in total supply in 2020 is expected to be driven entirely by a decline in mine production, with the secondary of scrap supply rising slightly during the year. So, there's a lot to be going off of right now, but this is definitely still something we need to pay attention to, pay a close eye to, because this could be where it's at. If we're talking about silver catching up or silver rising, it has to be somewhere in the mix of supply and demand. And what this pandemic is going to be doing to it is definitely relevant to stay up to date with. So anyways, I'm going to wrap this video up here. If you did enjoy this video, make sure to smash the like button. If you enjoyed any of these two articles, make sure to check them out. The link will be in the description. I'm trying to wrap this video up. I don't like my videos going too long, so if you want to continue on reading in the second article from Kitco, the link will be in the description as well. Thank you so much for tuning into this video. Make sure to smash that like button. Make sure you subscribe because I post daily videos. This was Silver Slayer. I'll see you guys soon. Peace.